been trading for over 20 years, and as an experienced trader, I have found that my favorite, most profitable time frame to trade is the 1 hour chart. In this video, I'm going to share with you a simple 1 hour trading strategy that I designed 8 years ago. And believe it or not, I'm still trading it the exact same way, which I think is a testament to the durability of the strategy, which is how well it's performed and stood the test of time. This 1 hour trading strategy made money 31 out of the last 36 months through bull markets, bear markets, low volatility, and high volatility regimes, even COVID and the US banking crisis. Just think about that. That means the strategy lost money only 5 months in the last 3 years. Now, you may be wondering, how bad were the bad months? Were they really disastrous? The worst month, I'll tell you, was a 380 pip loss, or 3.8%. And before that, the losses were 75 pips, 15 pips, 60 pips, not so bad at all. More recently, it made money 16 out of the last 19 weeks, which I would say is pretty solid results, if I must say so myself. So how does this strategy work? It is actually quite simple. But first, I want to remind you to subscribe to my channel for more great tips like this. How I settled on the 1 hour chart and not the other charts is something very important to talk about because there's so many time frames to choose from, especially for beginner traders, and picking the right one is sometimes one of the most challenging things to do. Between the daily, 1 hour, 15-minute, 5-minute, and even 1-minute chart, why did I pick the 1 hour time frame? Why did I settle on this? Well, I've been trading for a very long time, and it took me a while to settle on the 1 hour chart. But I like the 1 hour chart because it is not as noisy as the 5-minute or the 15-minute chart. This time frame does a much better job of encapsulating what the true sentiment or the trend of the day is, what the market really feels like, which direction the currency pair really moves, far better than the 1 minute or the 5-minute chart, which can be very erratic. It is also long enough that the pips are more meaningful. I mean, it can lead easily to 20 pips, 40 pips, 60 pips, 80 pips during the session that I'm trading. But usually it's also short enough that I'm not in the trade for longer than 36 hours, which for me, personally as a trader, is a sweet spot. I found that in my years of trading, the best ways to consistent profitability is to have a clear target and to bank pips quickly and consistently until you reach that target. And the 1 hour trading strategy, the 1 hour time frame, does a fantastic job of helping me reach this goal. Now, let's get right to the strategy because I'm sure that's really what you want to hear about. This 1 hour trading strategy is very simple. We're basically looking to sell when both the short-term trend and the medium-term trend are bearish. And the reason why this is important is because you want the short and medium-term sentiment and direction to be on your side. You want to be buying in an overall uptrend. You want to be selling in an overall downtrend. Otherwise, you're fighting against the tide, and that can be a very difficult period to trade in. One easy way to determine the short and medium-term trend is to use moving averages across higher time frames, also known as multiple time frame analysis. My best SIP trades are the ones where we are buying when a currency pair is above all of the major moving averages and selling when it is below. Let's take a look at how this would look like on a chart. In this New Zealand dollar, US dollar chart, Kiwi dollar, there are 4 moving averages that you see: the 20, the 50, the 100, and the 200 simple moving averages. These are my favorite moving averages to use. And on this chart, you can see the Kiwi dollar is trading below all of these moving averages on the daily chart. You also see it on this 4 hour chart, and you also see it on this 1 hour chart. This is a classic example of Kiwi dollar being in a strong downtrend on a short-term basis, 1 hour chart, and a medium and long-term basis, 4 hour and daily chart. And when we have this type of setup, and it's below all of the major moving averages, we also have what we call moving average clearance, which means that there's no major support in this case below current levels, giving us free room to fall, and you don't have to be worried about any key levels right underneath us immediately. Now, let's take a look at this chart. This is my ZIP Kiwi dollar chart, same chart. In this chart, you can see there's a red background, and there's an indicator line. And the whole rule of thumb is that when the background is red, that means that the medium term, which is basically the longer term trend, is bearish. When we have a green background, that means that the longer term trend is bullish. If the instrument rises above the indicator line, that means the short term trend is also bullish. So if the instrument drops below the indicator line and you have the backgrounds red, you'll see that a white candle forms with a red border, like this Kiwi dollar chart. that's when you get a sell signal. And it is in the sell zone the entire time it spends below the indicator line with the red background. On the flip side, you can see in this Euro-CAD chart that the currency pair is above the indicator line, a white candle is formed with a green border, which means that this is a buy signal. And the whole time that Euro-CAD is in the buy zone, it is above the indicator line and the background is green, indicating the short and medium term trends are bullish. So that's when you want to look for opportunities to buy, not to sell. This past week we had a very smooth, easy to identify Kiwi Yen ZIP short trade at the New York Open. At the time, stock futures were trading sharply lower. That day we had the war between Israel and Hamas escalating, reflecting nervousness in the markets. The New Zealand dollar was already weak and selling off after soft inflation data that we had earlier in the week. So the fundamentals were there, the technicals were there, and we had the clear Kiwi Yen ZIP sell signal. And the sentiment was there too, with stock futures being lower. So this had all the makings for a good trade. But I still checked the higher time frames and to make sure that we had moving average clearance on the 1 hour chart, which you can see here, and enough room to fall before support on the 4 hour and daily charts, and we did have that. So we took the short trade in Kiwi Yen right at the New York Open and caught a part of this generous move that happened in Kiwi Yen during the US session. The easy to identify examples go on and on. On the same day at the New York Open, we also went long dollar CAD. It was trading above the indicator line, had just gone above the indicator line, and the background had just turned green, which means that short and long-term trends were bullish. And at the time, we also had come off of stronger US retail sales numbers and weaker Canadian inflation data. So we had dollar CAD in the ZIP buy zone. We had the fundamentals to support the trade. And these ZIP charts are available to all BK Trader members to help them identify highly accurate trades on the 1 hour chart easily. I also checked the other time frames for moving average clearance, and I saw that dollar CAD was above all the major moving averages on the 1 hour, 4 hour, and daily chart. So even if you don't have ZIP, you could use the moving averages to see where the short, medium, and long-term trends are. So fundamentally, the US had reported good data, Canada had reported weak data. And on top of that, US stock futures were sharply lower, which meant that the mood in the markets was cautious, which is typically bearish for the Canadian dollar. The combination of positive US data, negative Canadian data, the ZIP buy trade at the New York Open, and a sell-off in stocks gave me all the reasons I needed to go long dollar CAD. I checked the other time frames for the any moving average clearance. We got into the trade, and this became a very beautiful dollar CAD long trade that generated quite a number of pips during the New York session. The secret to trading well is to have clean, easy to read charts that removes the noise and helps you make the right decisions. It also encourages patience and keeps you out of bad trades. For example, if Eurodollar is in the buy zone, then you should not be looking to sell, but instead looking for opportunities to buy. By knowing that, you can make better trades and avoid bad ones, which I think is valuable in of itself. Using the principle of buying only when the short and long-term trends are positive in a supportive fundamental environment with our BK Trader ZIP trading strategy, we banked more than 2,000 pips year to date. But what's more important is the consistency of the performance. If you're interested in getting ZIP, interested in learning how to trade with fundamentals, I included a special discount link in the description of this video. And I hope that you'll look at it because I definitely think that learning how to use fundamentals to trade is very, very important.